Thank you very much for joining us this evening. You're watching News Now and I'm Nivedna Prabhu. Let's begin with our top focus for the hour because the rupee is once again under pressure amid Trump's tariff threats. In fact, let's put that into perspective for you. Rupee fell to near record low levels in trade today, raising concerns for importers and policymakers. In fact, the rupee is among the worst performing Asian currencies this year. My colleague Ankita brings you more details as far as the situation is concerned, and then I'll go across to our special guest joining us this evening to look at how he is reading into this.
Well, yes, rupee is trading near its record low levels of $87.8 currently. But remember, rupee had hit its highest level, its record high level in the month of February 2025 at $87.95. So what are the factors that are weighing on the value of rupee? First up is the fact that US President Trump has imposed a 25% tariff on India, and this substantial raise of tariffs on Indian exports is weighing heavily on the Indian rupee. Besides that, we do see FII continuously selling Indian equities, and this outflow of FIIs is also weighing on the value of rupee. Besides that, dollar purchases by importers is also something that doesn't augur well for the rupee. And besides that, the rupee has been a worst performer as far as emerging markets or Asian pairs are concerned.
All right, Ankita, thank you for joining us with that. But like I said, I have a special guest also joining us this evening, Abhilash Koikkara, Head Forex and Commodities, Nuvama Professional Clients Group. In fact, Abhilash, thank you very much for taking the time out, joining us this evening on ET Now. Let me begin by, of course, asking you this, that the rupee is trading at the numbers that we're looking at, in fact, touching an intraday high of 87.89. This is just shy fact of the February record low that we saw. But how important is this psychological level for traders and market sentiment that we're looking at in this developing situation, Abhilash?
Yeah, thanks, Nivedna, for having me. So that, as correctly pointed, there are two or three factors which are affecting rupee. One obviously is the FPI outflows. So if you look at a YTD number, we are looking at close to $11.8 billion of outflow. Second, obviously, the knee-jerk reaction which we are seeing in the last week or so is basically because of the Trump tariffs, right? So India were the first on the table to negotiate the deal as put across by our government. But what we have seen is that we have got a raw deal in terms of the percentage, right? So if you look at the other Asian peers like South Korea or Japan, they are in the range of 15 to 20. But India, the first round of tariffs is supposed to be around 25%. However, the more critical part which followed the announcement was the penalty which will be imposed if Russia imports oil, if India imports oil from Russia. Now to put things into context, right? India's oil import, 33% of India's oil import came from Russia in the last year, right? So that's a significant chunk. So if in case there are some penalties or subsequent tariffs which are followed, right, because of India's import from Russia, then that would be negative for our current account balance. Summing it up and kind of topping it up with our outflows which we are seeing in equity markets, right? There is a very high likelihood that rupee can breach the all-time lows, which is very close. It is at 87.95, which is a psychological level of 85. And if that continues, then we might see a swift move towards 89.90. So a lot of this hinges on the amount of tariffs which get finally discussed between India and US. And more importantly, what are the kind of penalties or how we kind of break through in terms of the oil imports from Russia. India also exports around 25% of the, around 21% of total India's exports is to US. So a 25% tariffs also impact some sectors very negatively, especially pharma and garment. And if there is no breakthrough, which we can see there, then we can see these continuous outflows from Indian equities and a deterioration of the current account balance, right, which might eventually lead rupee to a new low in the month or two.
Abhilash, as you pointed out, of course, taking a cue from what you've said and essentially what we're given to also understand in this situation of Trump's tariffs announcements as well. And of course, since we are going to be looking at that number as well. But on the other hand, do you see that in terms of the current move as a measure reaction or an overextension of the sentiment? And while you point that out, given this particular situation as well, given how close we are to record lows, how critical is RBI intervention at this point? Do you expect them to defend the 88?
Yeah, so we have seen some selling from RBI today, right? So if you look at the offshore market, we were trading close to 88.11, right, when we are about to open, and we saw an immediate intervention from RBI, and the spot here was trading around 87.80, right? So there is RBI intervention definitely trying to protect those 88 levels. Also, if you look at the RBI reserves, they are close to $700 billion. So we have a significant war chest to defend the rupee. However, if the tariffs stay in place and we are not able to have a breakthrough with US, and there are some penalties or subsequent tariffs which are laid on India for its oil imports from Russia, then I think these dollar purchases will go up. And importers, we are already seeing importers panicking and covering some of their exposures. So that might lead rupee towards 89. So yeah, today as I speak, RBI is defending that 88 levels. But if this dynamics continue for a month or so, then we might see rupee reaching new lows and probably breaching 89 mark towards 90 in case things don't sort out. See, the thing, Nivedna, here was that markets like certainty, right? And the fact that we were one of the few members who were first on the negotiation table, the common consensus in the market was India will come up with a fairly successful bilateral deal with US. Now, when that did not play out and a lot of noises started coming out in last week, and that is why we see this knee-jerk kind of reaction where rupee is close to all-time low, right? So once there is certainty, it may be 20, 25, and we have some clarity of how things are going to go ahead, then we might see some pullback in rupee. Otherwise, more or less, the range of rupee looks to be 86.5 on the lower end and can extend towards 89, 89.5 on the higher end.
You know, Abhilash, as you point that out, the other aspect of clients' positioning, in your opinion, how is that looking? Are they staying defensive in this environment, or are they treating this as an opportunity to take direct bets?
So basically, the reactions of the client, whether it is equity or currency market, is similar, right? So when the going gets tough, everyone wants to kind of cover. So we are seeing some kind of panic from importers and continuous buying at any dip because of this kind of uncertainty in the market. And exporters, especially, so one more thing which has played out against exporters is the carry, right? Because RBI has cut more than around 100 basis point in the last 6 to 12 months, whereas Fed has not cut any interest rates, right? So interest rate differential between the two countries have also come down significantly, and that is also reduced the carry for selling rupee, right? So in that case, we are also selling dollar. So in that case, also we are seeing muted participation from exporters at this point. And because there is panic in the market, we are looking at importers covering their exposures, which is also putting some upward pressure on the dollar rupee pair.
All right, Abhilash, on that note, I want to thank you for taking the time out, joining us here this evening, and also sharing with us your perspective as to how you're essentially looking at this. Those final numbers, well, we're all awaiting the same and to see how the markets will further react in terms of that. But for the moment, we leave the conversation at that. Let's